Ask me what I'm doing, just grinding. Haters wanna hate, let them hate, never mind them. Be more bins, tryna reach the next plateau. And I can't stop till I achieve my goals. Keep a couple fees inside the photos. So official with the vibe, you can't fuck up my zone. Hold on for a minute, let me count mine, you know.
Welcome to the Ultimate Wealth Podcast, the show where we unlock the secrets to financial empowerment and lasting prosperity. I'm your host, Derek Pasalacqua, and together we're on a journey to transform your financial future and elevate your life to new heights. Join us each week as we dive deep into proven strategies, powerful insights, and transformative stories. Whether you're an entrepreneur, a busy professional, or someone seeking to create wealth and build a lasting legacy, this podcast is your go-to resource for achieving financial mastery and living a life of intentional greatness. This show is about more than just building wealth. It's about creating the life you deserve. So join us and let's build a future where financial freedom is not just a dream, but a reality. Welcome to Ultimate Wealth. Hello and welcome to another episode of the Ultimate Wealth Podcast. I'm your host, Derek Pasalacqua, founder and CEO of Legacy Guard Financial Group. Today, we're diving into one of my all-time favorite topics, the infinite banking concept, or IBC for short. So if you've been following our journey, you know we're all about empowering you to take control of your finances, eliminate debt, and build lasting wealth. So IBC is a powerful strategy that aligns perfectly with these goals. And so today I want to break it down and explore exactly who IBC is best for, who maybe it's not best for, and the best use cases to really maximize its potential. So let's start off by the three things that I want you to have by the end of this is I want you to have like absolute clarity on what exactly is IBC, number one. Number two, who it's best for, who it's not best for, best use cases, and maybe more importantly, what it shouldn't be used for. What are some use cases that are not ideal, but that you hear people talk about? Okay, so I think it's important to really understand the fundamentals of infinite banking. IBC at its core is about becoming more financially efficient with your money and replacing the banking function in your life. It leverages very specially designed and engineered participating or dividend paying whole life insurance policies from a mutually owned life insurance carrier. Okay, these policies come with dividends, which as you as a policy owner with one of these policies, with a whole life policy like this, you're part owner of the company, meaning you get to share in the profits of that company through the form of dividends. Okay. Now, in addition to the dividends, which are not guaranteed, although all the companies we work with have been paying them, have never missed a dividend payment in over 100 years. You also get guaranteed growth. You have a guaranteed minimum interest rate with all these policies, which allows you to build your cash value that you can borrow against. And unlike traditional loans, when you borrow from your policy, okay, you are collateralizing your cash value and then essentially borrowing future death benefit that's collateralized with the cash value. So you can only ever borrow up to the amount of cash value that's available in the policy, not the death benefit. So I know that can sound kind of confusing and people get that confused and twisted a little bit sometimes, but just to be clear is that you can only borrow the amount of cash value that you have available in your policy. So your death benefit is always going to be higher than your cash value just because it has to be according to the law and the what defines life insurance. Okay, and you have to be within the modified MEC or modified endowment contract limits, and you can't overfund. If you do, you create a taxable event. And there are certain use cases where a modified endowment contract can actually be beneficial and be quite efficient at accomplishing some very specific use cases, but we're not going to get into that today. So just know for the majority of us, you do not want to MEC your policy. Okay, so you want to stay within that 7-pay limit. Now, when you access funds, okay, you can do so without a crazy approval process. There's no credit check. It's essentially like borrowing from yourself, right? Because there's your money. It's a secured loan, so you can even take it to outside sources, really, like a bank, if you wanted to. Maybe you could get a lower interest rate. The more traditional IBC guys would tell you that they wouldn't like me saying that, quite frankly, but that's the reality. If you care more about efficiency than you do about sticking it to some big giant banking corporation, because in my eyes, there's not a huge difference between a bank and an insurance carrier. They're both giant corporate monsters. So I'm going to go wherever I can get the cheapest money. Now, when it comes to borrowing, I want to talk about when is a good time to do that, but I want to talk about kind of one of the features that make this entire, strategy unique is in the fact that when you borrow your money to use it, okay, in your policy, it continues to earn dividends and interest and compound uninterrupted, like even when you're using the money. So it doesn't matter. That's kind of one of the cool things about it is you get to use the money and essentially earn a return on the same dollar in two places at the same time. Creates a compounding effect, and it supercharges your wealth building efforts if you use it for the right things. Okay. So let's talk for a second about let's talk for a second about what is IBC for, and the most common use cases as far as like individuals and who it's for. All right. So first off, I like to say, first and foremost, it's for individuals who want to take control of their financial future and who want to take back control of the banking function of their life, and who basically just want to have a place where they can store their capital. Okay. They can store it and still maintain a level of control instead of giving it to the bank who's trying to just basically separate you from your money. All right. So if you're tired of relying on the traditional banks and investment advisors, then IBC will offer a refreshing alternative. Okay. Entrepreneurs, small business owners, and self-employed professionals often find infinite banking particularly appealing because it provides the three key ingredients that the whole concept is built on, which is safety, liquidity, and growth, right? So you can get safety and liquidity from a checking or savings account, but the growth usually is abysmal. You can get growth from being in the market, but your money's certainly not safe. And some cases, like a 401k, it's not really that liquid. I mean, you could get to it if you needed to, but you're going to have penalties and fees if you're not, past a certain age. So it's really the most efficient. The reason that IBC uses whole life insurance is because it is the vehicle that brings those three elements together in the most efficient way. Okay. Because one of the biggest things that you are taking into account with infinite banking is opportunity cost, which is just essentially the idea that, like Nelson said in the book, Becoming Your Own Banker, and I've said this in the last few episodes, I feel like I keep repeating myself, but the first thing you got to understand is you finance everything you buy. You either pay interest to someone or you give up the ability to earn it. So when you buy something or when you spend money, okay, if you just go to the store and pay for something, you don't just lose that money, but you lose that money plus everything that money could have earned you for the rest of your life because it's gone, right? And with infinite banking, every dollar you put into that is going to grow and compound for the rest of your life. And it allows you to still be able to use it, but without completely just losing and throwing away all that opportunity cost. There's always a cost of funds. There's opportunity cost associated with everything, and there's no way around it. You're going to pay opportunity cost no matter what. It's just a matter of how can we minimize it and most efficiently navigate what we're trying to accomplish, whatever that may be. And that could be different for everyone. I always tell people this is not financial advice. Don't sue me. This is for educational entertainment purposes only. But just something to think about. A question just to ask is, anytime you start to do something, is just think to yourself, hey, is there a better way I could potentially go about this? Is this the most efficient way? Is there something, could there be a better way, a different way? A lot of people never even stop and take the time to ever even ask that question. So it's never it never even crosses their mind. They're just doing the same things they've always done because they just kind of assume, hey, that's what everyone else is doing, and that must be kind of the only way there is to do it. So I'm here to tell you that there is multiple ways, and there is no one right or wrong way. There's more than one way to skin a cat, as the saying goes. So it really becomes not about what's best, but what's best for you as an individual. And anyone who does not tell you that or treat you that way, I would suggest maybe looking at getting a different advisor or professional that you're working with. So another place where IBC tends to shine and is particularly attractive is also for people looking to pass on wealth or families that are looking to create generational wealth and secure their financial legacy. And so they make excellent candidates as well. So also, if you have a long-term perspective on wealth building, okay, and you value autonomy, then IBC could be an absolute game changer for you. All right. So let's talk for just a second now about who is IBC not for. So while infinite banking has incredible benefits, there's no doubt about that. Okay. So it's not for everyone though. If you're looking for a get rich quick scheme, this is definitely not it. All right. IBC requires a lot of patience, a lot of commitment to long-term planning. You can't think short term, and you can't, like one mentor says all the time, you cannot solve long-term problems with short-term thinking. So anybody who's looking for something that's going to be an overnight fix, this isn't it. This is a long-term solution, a foundation for which you can build the rest of your financial life on top of, but certainly is not an overnight or a quick fix by any means. So also, if you're not in a position to where you can commit to capitalizing the policy, right? So making your premium payments for a minimum of 7 years, but really ideally longer than that. If you're struggling just to keep your head above water and you don't have consistent or regular cash flow, then it might be wise to go ahead and address those financial issues before trying to dive into IBC, because it's going to be very difficult for you to maintain those premium payments to make this worth your while. So that's something to consider. Okay. And also, individuals who prefer high risk, high reward investments will probably find infinite banking a little too conservative, as it focuses more on steady and guaranteed growth rather than just speculative gains. So if you're someone who, is all about chasing that thrill and that big adrenaline rush, there's nothing sexy about infinite banking. There's some, it's an amazing concept and strategy, and it stands on its own 2 feet, but it is not flashy or sexy. It's just a steady, proven, long-term foundational asset that really just gives you more options, allows you to be more efficient with your money, and puts you in a better position to win financially long-term. Okay. That's really it. So if you, like I said, if you're one of those people that likes to just bet it all on throw it all on red and hope for the best, probably not going to like IBC. All right. So moving on. Now let's talk about some of the best use cases here. So now that we got out of the way what it is, who it's for, who it's not for, let's talk about what are the best use cases, what are the best ways that someone could utilize infinite banking. All right, so one of the most powerful applications that we do in particular, and that I know of, is debt elimination. All right, so by using your policy's cash value to pay off high interest debt, you can save interest payments and redirect those funds back into your policy. Now, you're not redirecting the you're going to pay interest on the money when you borrow it. So you're not, that goes to the carrier. But what I'm talking about that's getting redirected is the interest that you're going to save as we pay off the debts. You're going to say our average client saves around $80,000 to $100,000 total interest alone. That money can all get redirected back into your policy, which is incredibly powerful. Okay. And it creates a cycle of debt elimination and wealth accumulation. It's almost like you're turning debt into wealth. Okay. So another fantastic use case for funding large purchases or even large investments like real estate. So when I say large purchases too, I don't mean, I'll get to this in a minute, but I'm of the opinion that buying a car, for example, is not a good use case. I think anytime you're going to borrow from your policy, the activity, whatever it is you're borrowing for, should be able to yield you a greater return than the cost to borrow. Otherwise, it's not a good idea, I don't think. So, but when I'm talking about like real estate and large investments, because this is not an investment, this is a savings alternative. This is a place to store your money, where you retain liquidity control, but you get much better growth than a savings account. And then plus on top of it, you get all the other benefits of life insurance. Okay. So there's a ton of them. There are literally a entire rate of return is one out of about 50 awesome benefits you get with whole life insurance. Okay. There's tons of you get creditor protection. It doesn't, anytime you use your policy, it's not reporting to your credit report. So there's no structures on the loans to pay back. You can pay them back whenever you want. There's a ton of flexibility. Gives you a lot more options. You can be used as a volatility buffer in retirement. You get tax. If you use your policy right, you get tax-free growth, tax-free access to the money. Then you can pass it on to the next generation tax-free as well. And the list goes on and on. I mean, there's just a ton of awesome, amazing benefits in addition to just the rates of return, which aren't nothing crazy, but they're steady, guaranteed, and they do work, and that will allow you to be more efficient over time. And at the end of the day, we need to ask ourselves, what is it we are trying to accomplish? And let's start, like I say all the time, let's start with the end in mind, and then let's reverse engineer a path back to how we need to get from where we are, because it all starts with clarity, right? You got to get clarity on where you're at and where you want to be. Once you have that, then you start with the end in mind, and let's reverse engineer from how to get from where we are to where we're trying to go. And once you have that clarity, once you have that plan in place, then it just becomes about discipline and execution. All right. And that's where most people fall short. Most folks can come up with an idea. They can understand, figure out where they are. They can usually figure out an idea of where they want to go, or at least where they think they want to go. And then a lot of people can even come up with a plan for how they think, they should get there. And it may even be a good plan, but where most folks fall short, and I've been guilty of this as much as anyone, is in the execution. Because like I said, it's not sexy or flashy or fun necessarily. It's a lot of times the road to success is very boring, monotonous, mundane, and not this big thrill seeking thing that a lot of people on social media may try to make it sound like. It's usually not real sexy. So, all right. Now, one of my favorite use cases for IBC is first off, let me start here. One of my favorite things about it is that it grows with you through every phase of your life. And no matter what phase of your life you're in. So when you start young, you can pay these policies up at any point if you decide you want to stop paying into it. Okay, number one. Number two, this money inside is guaranteed to grow and compound for the rest of your life. It's a unilateral contract between you and the insurance carrier that is guaranteed, contractually guaranteed to be there no matter what. So once you get into your later years, into retirement, so a lot of people look at it like they got to choose between it and their like 401k or something. But what they don't seem to get is this is the thing that allows your other investments to perform better. It's an enhancement for everything else you already have. So one of my favorite use cases is to use this as a volatility buffer during retirement, because you can take out loans to fund your retirement tax-free during down years, okay, and let your portfolio recover. And then when your market's recovered, you go back to using it. But just having this asset to use, just having it there, so when you can use it when you need to, when you have market downturns, is so powerful, because it actually can be the thing that ensures that you don't run out of money during retirement. Because they did. I think Dr. Wade Fowler did a study where he talked about replacing the bond portion of your portfolio with whole life insurance and just a traditional 60-40 portfolio. And they showed how having that whole life literally allowed you to have, between like a 40 and 60% greater return on your other traditional investments, because you were able to use that to prop it up during the down years, therefore allowing it to recover and last much, much longer. So don't look at it as a either or thing, because that's not what it is. It's Caleb Gilliams wrote a book called The And Asset that I refer to a lot, because it is something that you can do this and that and not make it where it's a this or that thing. That's probably one of my favorite things about the entire concept is just how flexible it is, how many more options it gives you, and what else it allows you to do and show up more powerfully in your daily life. And that's what really matters. So when we talk about preserving your wealth and maintaining financial stability, like I said, having this as a volatility buffer is priceless. Okay. So the infinite banking concept is it can seem kind of like a robust financial strategy, but it empowers you to take control of your money. It can help you eliminate debt. It can help you build wealth on your terms. It's really ideal for those who value financial independence, have a long-term outlook, and are committed to disciplined planning. While it's not a quick fix or suitable for everyone, the benefits for those who embrace it can be life-changing. And if you are intrigued by infinite banking and you want to learn more about how it can fit into your financial strategy, well, I would encourage you to explore some of the resources that we have to offer. In particular, our Infinite Wealth Blueprint program. It's a comprehensive program, and it provides people with all the tools, resources, and support that they need to master infinite banking and transform literally their whole entire financial future. So again, I just want to say thank you for tuning in today and listening to another episode here of Ultimate Wealth. It was an absolute pleasure. If you're still with me, thank you so very much. I hope you got something out of this. If you'd like, check the links down below. There's going to be links down there to our website, to our community, to the program, all that good stuff. So until next time, I appreciate it. Have a blessed, powerful, inspirational day. Thank you so much for tuning in. And as always, remember to live your legacy.